Even as the markets were tanking, you remained bullish. You advised your clients to stay long and strong. They did. They've come a long way back. You've still got a 3,600 target on the S&P 500. Why the continued optimism?
Brian, I think that as you look at this market, if I had to put this into a quote, and I heard a great quote from my trading desk just the other week that, in price there is knowledge and in volume there is truth. And as you look at this market is clearly looking forward. It has ripped the rearview mirror off at this point in time. And all the economic data that you have out there at this point in time clearly points to a lot of negativity, a lot of problems, a lot of challenges. But the Federal Reserve has done a great job sort of building a bridge, along with fiscal policy coming out of Washington, to build a bridge to get us over this pandemic. And I think at this point in time, we got to continue to keep looking forward. And the market is one of the best forward-looking mechanisms. And Brian, we just published our monthly publication. We titled it Pause Before the Pop. And like we had said previously when we were on the show just a few weeks ago, Brian, that this is a market that's had a great recovery. We're probably going to enter a consolidation range that probably is about 3,000 at the upper end, 2,800 at the lower end. And then ultimately we consolidate for the next couple months. And then we see a pretty healthy pop into year end once we get through the election. And again, we think there's more upside, and our 3,600 price objective, Brian, we think is still an achievable number. Even though I've gotten a lot of pushback from people on it, our bottoms up model that we've been looking at for years still supports that kind of objective by year end.
Well, you're sticking with your convictions, and of course that's what we want to see, not somebody waffling every time the wind blows and changes here, Craig. What's interesting is I learned from your note this is the third fastest bear market in history, but by far the fastest recovery. It took only 12 days to come off those bear market levels. I mean, that bounce back was rapid and it was violent. What does that kind of move tell you about market sentiment? Did the bears simply get it wrong?
Brian, I think what it tells us is a couple things. First and foremost, I think the Fed learned coming through the 2007, 8, and 9 crisis that they need to act and need to act very swiftly. And they came in with a very quick, response to this. The second thing is, Brian, when you look at all of the bull and bear market cycles going back to the early 1900s, you will look at an extrapolated period of time 1 year out, and it would suggest a measured objective almost at 3,300. And I think what you're going to see is that this recovery is going to happen a lot faster than people think. I think that people are anxious to get back to work. They want to get their lives back to some form of normalcy at this point in time. And given the speed and recovery, I think that the biggest pain trade for most investors at this point in time is that this market is going to go higher. I mean, earnings at this point in time, you really don't have anything to bank on at this point in time for 2020. So you really got to look out to 2021. And that's where the charts are really helping us out. And clearly the trend is up and the pain trade is up for investors. And there's going to be a lot more FOMO, the fear of missing out, pushing this market, I think, higher into year end.
Yeah, I think it's been like 46% of companies that have issued guidance have withdrawn that guidance. So basically half the companies we've heard from saying we have no idea and we're not going to put it out there. When the crisis sort of was in full swing, Craig, we'd bring viewers these numbers about $1 trillion going into cash. By the totals that we've had, I think it's something like $5 trillion had, as of about a week ago, moved into cash. I would imagine, is that part of your bull thesis, which is at some point that giant sum of money could come pouring back into the equity markets if it's not already doing so?
Brian, absolutely. The fear levels are still very, very high. We're climbing the wall of worry. There's concerns about, outbreaks, second waves, et cetera, et cetera. That money's going to have to come back to work. And when it does, it's going to continue to push the market higher. I also think you're going to have money come out of the fixed income side as rates ultimately start to back up, as all this printing of money will have to eventually lead to some form of inflation out there. And as that money comes out of fixed income, comes off the sidelines, it's going to push this market higher. And I think where we should be positioned is, I think we still got to keep looking at growth and large cap growth, as I think there's still some very good opportunities in those large cap names, Brian.
Like where? Where specifically in large cap growth, Craig?
Well, where we're overweight right now, Brian, is we're overweight tech, we're overweight consumer cyclical, and we're also overweight healthcare. Some of the names that we've been highlighting, stocks like Apple. We bought that stock for our model portfolio in the crisis when we were on the show back in 2018, December of 2018, when we were doing the show from San Francisco. A nice early wake-up time for that one. But Apple looks good. NVIDIA looks good. Abiomed looks good. Neurocrine, NBIX, all these stocks look attractive to us, and these are names that we've been highlighting for investors.